This is probably the first time your members are going to hear about this. That is a bull flag. I'm the only person who probably identifies a bull flag using stochastics, and it is right. And I'm going to show you that.
So welcome back, everyone. We're sitting down today with John Kurisko. Good to have him back, of course, on the podcast. He's always getting value, sharing his trades, of course, trading every day, scalping the market. So John, welcome back on the podcast. Good to have you here. Look forward to see where we take this today, what we talk about.
Awesome, Etienne. It's good to be back. I get so much great feedback from the people who come from your videos and podcasts. It's just an amazing thing. So a lot of the members here at Day Trading Radio are members of your spot. So I just appreciate the opportunity to talk to you, to your subscribers. And I was just talking to you before, and we said, this is some really good stuff that when it comes down to what I teach, and just to introduce myself, I'm John Kurisko. I am the host of Day Trading Radio, and it's actually a show in the U.S. markets, but I cover it, of course, right now it's 11 o'clock at night. I actually trade most into the evening, too, so we have a good overnight or an overseas market, too. And I've been a trader since 1996, when I quit my job at the post office. You have that very famous video, Postman Quits Job, Becomes Day Trader. It was one of your earlier videos. I love that, seeing that come across my feed. And that's when I started really learning about trading. Started the show, Day Trading Radio, and started teaching trading in 2007 after, 20-something, I'm going on 27 years now of trading. And more of the education of it and showing people the path I take, which is very hard. And what I do every day and what I've been doing for years and years and years, and especially actually as people start to realize how I trade and they want to accept or want to adapt some of the concepts how I trade. And what I was saying, that the trader's biggest issue is not trading, it's not having the discipline to take trades and having the patience to wait for trades. And what I say by that is, I develop a business plan, and that's what I want to go over. I worked on this whole thing over the last week, as I knew I was coming on with you, and I said, you know what? I want to break this down so simple and just give out my 3 setups that I do. And it's a business plan that keeps you in a trade. The hardest thing about trading is being in front of the computer at the right time for the right trade. And what is that trade? I mean, there's so many different branches we could go. I know you've been trading and you trade, and there's so many different styles of trading. You have indicators. People love Fibonacci's. People like Bollinger Bands. People like everything. Everyone has a different thing. I have developed, I trade a stochastic oscillator, divergence trading. But I've also added a lot of things over the years that combine that. And for me and my personality type, I do not want to be an over trader. So I've developed a system to kind of keep me in knowing when to exactly get in a trade, when to get out of a trade. There's no questions, nothing, anything. And that for me works because discipline is the major issue with traders. Discipline and patience. Most traders are going to be over traders. You're going to, especially fast trading, day trading. There's so much I'd love to talk to you about. I want to answer all the questions.
Tell me a bit more about why you think traders should have a business plan, because people think, you can just go in the market, catch setups and trade and you'll be good. But why do you need to have a business plan around it?
You said it right there. People think they can go into the markets and just trade and take money, right? You heard the stats. 95% of day traders don't make it. You know why? 95% of the people don't make it to professional sports teams. If you're going to be great at something, if you're going to be great at trading, not any Joe Blow is going to come into the markets and just extract money from the market. It's just like anybody could go into a casino and try to make money out of a casino. You have to go in there with a plan. You have to be a card counter or something like that. Take the best games possible. Game theory, wait for those opportunities. And that requires so much discipline. That requires so much patience to be able to fit yourself into a business plan. So a business plan for me is a successful model of trading that I could look at the plan and say, is this my product? I have to find this product, just kind of being a business, making money. For me to make money, and I'm a scalper, I look for 2 setups in the market. And it has to set up exactly like this, because this is my business plan. And if I take the setup, I look at what the next step is. What's in the business plan? It says, well, you move your stop up this amount, place your stop here, let it run, watch the stochastic 63. I have things that I'll explain to you in a second. But it's very important to stay within that barrier, because if you're just a loose cannon in the markets, and getting back to why do you need anybody could come into the market and make money, you can't. You will be eaten up and chewed up and spit out, because the financial markets are the biggest industry in the world. And a Joe Blow going in is like being a basketball player and you want to make it to be the pros. You want to make money at something, then you better be good at it. And the market will, it knows where to go. The algorithms, the things. It's not as easy as you think. Oh, I have to get in. A lot of people say, I just have to get in and get out, follow the trend and stuff. But, I've done this a long time, and now I've come down to a point where I realize less is more. Wait for the opportunities. Be there in front of the opportunities. Another important thing is if to be a trader, full-time trader, which I'm a full-time trader. It's very hard to do because you have to be in front of the computer, pretty much most of the day. I mean, there's different type of traders. We have swing traders. We have, day traders. We have scalpers. But for like a scalper looking for certain setups, you have to be there for the setup to be and to be able to take the setup when you see it and get out. When you're not in front of that time, to put the time and effort in being a professional, all right, being a professional is being successful, to be able to get up there and do that and be focused enough to take the setups, don't goof off, don't overtrade, don't gamble, all these different things add to the formula. Then you become successful over time after you go through that, learning how to. So that's what a business plan does for me. It identifies everything, keeps you it's a proven way that something works. And if you follow the business plan, it will work. If you go outside the business plan, it won't work. If you start to gamble, I know the setups that work. I'm going to show you 3 setups today that if you took it, they're exact setups. What's great about it, over the years, I'm going to share some stuff with you whenever you want to do that. But over the years, I have developed, I use stochastics. I have 4 bands of stochastics I called my quad rotation. And it's my own indicator that I developed. And the results are just amazing. And when I combine that with the stochastic divergence, when we go back and I show you what it looks like, you'll see it just works every time. And if you found something that worked every time, and it's hard to say that, like there's no holy grail in the market, but the right conditions and everything and lined up the way you see it here, it'll work 95% of the time. Maybe you might get hit with news or something like that. If you had a setup, wouldn't you wait for that setup? Or would you knew something, a certain setup, it had to be a perfect combination. Stochastics were rotating down here, prices above this moving average, something else is set up, and everything converges, and the confluence is perfect. And you knew every time that happened, it was a 95% chance it would work. Would you just wait for that setup and be 95% perfect, or would you say that only works? Maybe it works 3 times out of the day, and I'm sitting in the front of the computer for 8 hours, and I'm going to take 3 trades.
Well, that's the thing. People want to have that kind of setup that works all the time, every 5 minutes to come back and take it and make money. It will be hard to wait for 3 or 4 or 5 hours, like being there and doing nothing, because then you feel you're losing your time. So for most people, that's really hard to do.
Very hard to do. So the more time you're in the market has a better chance of taking you out. It's that also. So a lot of the techniques and a lot of the trade setups, I call them the trade setups that we do, I apply those on daily charts for long-term trades. I apply them on my 1 minute and 5 minute time frames for my scalps. Some people use it on their 10-second chart. And that really and that's pretty good, And I said, let me start looking at this 10-second chart. And I said, all right, I'm checking out. And then then I find that things work on the tick chart and things are working on different type of charts and stuff. And, it depends on your time frame. It all adds into what I'm going to show you. I mean, I have something really kind of special for you. Because I made these blueprints and I'll send them to you and you could actually give them to whoever wants them and stuff. I have a little PowerPoint.
Yeah, we'll put them link below. You can check it out and tap there to access them. Guide me through it. Show me the setups and show me what you have to share with people. Curious to see that.
All right. Remember, we're just talking about you have to really determine what type of trader you are. and applying these different techniques could work on each one of these things. It's just a different time frame. Today, what I specialize in is trying to get people to make daily income in the markets. And when I say daily income, it's going to a job each morning, sitting in front of the computer, identifying setups, taking the trades and and I'd be realistic on things, trading the MES or S&P futures contracts. Just to kind of give you a little background on exactly what I trade. I trade futures and I trade them on a shorter time frame. I scalp them during the day. And what I'm looking for, and I'm usually trading the MES, which are the micro contracts instead of the regular ES mini, the mini ES, which is a little bit heavier and kind of it goes against you fast. You could be hurt a lot. So the micros are really good to actually start trading with, especially for some of the newer traders that are just starting out. Anyway, we're going to be talking about scalping today. Scalping. But day trading and scalping, kind of the same thing. Swing trading and position trading, everyone knows the stuff like that. So remember we were talking about business plan. This is my business plan. Basically, I live by a business plan. So sometimes I'm so scattered. I have a lot of stuff in my head about trading and stuff, but I go all over the place and I'm always looking for things. So it's very important to me that I define everything for me. It's my personality type. Just other people have a different personality type and they're able to handle things. For me, I got to really put everything in a flow chart. That's what I did for you tonight. Today I actually made a flow chart, which makes it easy for people to get into a trade. And what this is going to do is going to prevent over trading and it's going to prevent losing, basically. All right, so let's jump on here. Order, of course, this is, I guess you guys could pause the video and kind of write this stuff down. Order criteria, profit exit criteria, all these things need to be figured out as you're trading. You can't be just going into the markets and not knowing what's going on. So all these things should be defined before you get into a trade. How you're going to get into a trade. What are you looking for? How are you going to get out of a trade? Automatic stop criteria. Do you have one? Where's the stop go? What's the risk management of the method? And what I mean by that could be a little bit complex, but what do we want to add shares, take shares off? How and when do we want to increase the position size? How to set up your charts, tools of trade, balance. I don't worry about the balance thing. That's from an old thing here. And then these are my rules. And this is, again, everything about this is an important thing. I know this works. This is what I do every day, So I'm very comfortable of teaching this. I'm proud to teach this. I teach this because I enjoy, like you do, travel and freedom. And I feel like people, you get stuck in the grind. You have dreams you want to do, and not many people can achieve those dreams. And this is kind of a path that you could achieve those dreams. If you have the discipline and patience, you can make something out of yourself as a trader. But you have to be the best. You have to be the best you could be. And to be the best, you have to be organized. And these are the setups. I want to show you these setups today. Very easy to say. I know we have limited time, and a lot of people don't know about the stochastics and stuff. I probably discussed them on the other videos you have. I've done like 4 videos. So I'd recommend other people to look up the rest of the videos.
Yeah, we'll link them below and in the show notes. People can check them out and go through those. We did a lot of stuff in depth and you went through all the settings and stuff. So that's been very powerful.
We went out through a lot in those videos, and it's all based on the same thing. I mean, I'm truly, really love this style of trading. It is a very successful. It's the only way to be successful. And I sound crazy saying that, but it comes down to having a great methodology. Doesn't do anything unless you have a good trader, and the trader is the weakest link in trading. You're the one that's going to be, and I'm going to show you something. I'm not going to waste any more time. So anyway, some of these things you might not know. The super signal is a merger of the quad rotation. Now, quad rotation is something I designed using 4 stochastic bands. And each stochastic band, I'm going to try to, you'll see these 4 bands down here. These are my stochastic bands. Now, they're all based on different times. They're fast stochastics, 9, 3, 14, 3, 44, and 60, 10. Now, I'm not afraid of giving this stuff out. People say, man, this stuff works so good. Why are you getting it out there? Because you know what? Most people are going to fail. because they don't have the discipline and patience. And it's just that way. It's like, I'm not worried, you know. You have to be the best person you could be as a trader. You know, you got to, if anything you do, you got to be the best you could be. And to do that, you have to wait for this setup. Now, here's our 4 stochastic bands. You got to learn the system. You got to abide by it, take the signals, and get the hell out. And use this as a cash machine. So these are my quad rotations. And I'm watching the comment as I call this like looking at an echocardiogram of the markets. Stochastics developed by George Lane in the 1950s. And again, this is some stuff that I've already discussed with most of the people. I want to kind of jump to that thing here. I'm going to jump past this. George Lane here in the 1950s, it's a oscillator that measures momentum. So it's a momentum indicator, shows the location of the close relative to the previous closes. And that's part of the formula. And not to get, I don't want to blow anybody's mind here, but you can read up on stochastics and how the formula works. But you're looking back at a certain amount of periods in your candles. So I'm going to go back to our chart here. We're looking at the time. So the stochastics go from a range from 0 to 100. And that really represents how this candle closed on a range of 0 to 100. So if the candle is so big, you know, it's that big, the top would be 100% of the candle, the bottom would be, and there's a formula that over time you're learning how this candle is closing, relationship with even the price. So you could actually start to see the momentum, the closing is moving higher, even though the price is going down. So that's the key to divergences. It's one to, you know, looking at price action versus the momentum internal. You know, what's great about the stochastic, it's measuring the internal turn over price over a period of time, which you can't see on the outside on the chart because the price is still going down. But because of the moving average represents, it's starting to turn back up. We're going to get a turn up, and that lags, and that always makes a nice move. So right there is our key number 1 setup. It's called the stochastic price divergence. And that's very important in our trading. Now, like I said, some of these things don't happen all the time. So what if you had to wait, here, this is 2 a.m, which is great about this is people in Europe could trade this stuff. Now, we've talked about this before, but the concept here is momentum is going to go up. And then if you have a rocket and you have the engine out of the rocket and it dies, all right, it shuts off. You could easily measure that shut off. It goes straight up and then it dies. But the rocket that it's pushing won't just die. It'll have momentum and it'll continue to move up. And that's the concept of divergences. Divergences, well, the momentum will dry up, though the price will go higher. That's a sell-side divergence, knowing that we're going to eventually roll over. We measured that and here's a good example of it. Here it is. You see this right here? Here's your stochastics. Here's your price. You have a stochastics are low, stocks high. Go back over here. I'm looking up here. Let's take a look. We just found one there. Here, this one right here. This is kind of a high. And there's a double top right there, a higher and a lower high. That's a divergence. Again, sometimes these things could be a little overwhelming for someone who doesn't know the concept of divergence trading. But that's kind of the basic of that setup. This is what a divergence looks like. Let's just go over that divergence a little bit more because it could be found on any time frame. I like to use it on the 5-minute and the 1-minute time frame for scalping. But if you find this on the daily chart, it's a great, like if I find Apple in a divergence, it's one of the best setups ever. It's like, and again, you could see the low, the higher low, the low, the lower low. This, you know, the lower price, but the momentum is shifted. Soon the price will shift. That's our go-to trade. Now I know it's, again, here you have a situation where you're going through the day and you have 3 setups. Are you able to get by and just wait for these setups? And when do you get out? So I wanted to do this for you. Again, I figured people were going to pause the video and maybe take screenshots of it. I could send you the information or they could get it at the site. This is, again, part of a business plan, is knowing exactly how everything is setting up. Now, this is my old way I used to do this. I just used to write it out, but I said, you know, it might be better if we put it into a flow chart. It might be easier for traders because I still find traders having a hard time following a business plan when it's written out for you. You know, that's the big thing. All right. So there's important things here that we could go into, but I want to get a little further moving here just to give you examples of divergences. All right. Now, this divergence is just one part of the system. And the system is, and here again, we're going to jump right into this. These are my new flow charts I just put together. Remember earlier we talked about the quad rotation, and then we talked about the divergence. So I kind of didn't put them together when I was talking about it, but the first thing we were talking about is these rotations of the quad rotation. And when each one of these bands get oversold under 20 at the same time, that is what we call a quad rotation. This is probably the first time your members are going to hear about this, all right? This is something I do. I teach this. It's exclusive to my teaching. And this is very important in part of the timing. And what this represents is multiple time frames converging at one. So remember, the stochastics are measuring our candles look back period. So this is 9 candles. This is 14 candles. I don't have it labeled. This is 40 candles, and this is 60 candles. All right, so it takes a longer time for the big ship to move. This is the bigger channel. I've done the calculations that put me at the 60-10 area here. The 60-10 stochastic represents the 5-minute time frame when I use the 9-3 stochastics, which your default, it's your default stochastics on the 5-minute. So instead of having 2 charts or anything, and you could lay these over, but this is an excellent way of actually knowing when all your time frames are going to be lined up. And when you have the time frames lined up, there's a better chance you're going to get the biggest move. Because what I am searching for in the markets is my job, and I'm looking for pullbacks in positive markets, like a good uptrend and a pullback, and I'm looking for what we call pivots. Pivots are market coming down and then a market moving up, and the pivot is the area where it changes direction. And pivots could be very small pivots, little flags. It could be larger pivots. But we identify these pivots by just putting our basic trend lines in like this. And it's very easy when I'm trading, and this is what I'm doing. You're actually following me. You're following me trading right now, because what I'm doing during the day is marking this out for you. I'm saying, all right, we got a quad rotation here. Take your short and put your stop right at the highs, and that would be our short, because we're only taking that setup. We get down to a quad rotation here. This is one of our setups that we look for a bounce, and we look for what we call a super signal that develops all this. So if we have a quad rotation and then we had any of a divergence, that is considered our holy grail setup. So that is just a simple thing that takes all the emotion out of trading now. Now, I've eliminated emotion in the trading. I've given us our best setup ever because of the hours and hours of research. That divergence right there, combined with the quad rotation here, tells me that usually is going to be a bottom here. Now, that's a double bottom, higher stochastic rotation. Right there, that's our low. Your stop goes right under the low, goes one tick. First of all, this technique of trading here is so good because the risk is automatically defined. And that's another thing that's going to kill traders. Traders don't put their stops in right away. You automatically, you're jumping in and you're letting you're gambling. If you're gambling, you might as well go to the casino. If you're going to trade the market and want to make something out of it and live a life like Etienne lives in multiple countries, you got to step up. You got to step up to the plate, and you got to only take the divergent setups. And I keep on saying that. I am I'm that comfortable and confident with this combination right here. These things work. Now, that's just part one of the situation. The part two is getting out of the trade. All right. And another thing that's hard for traders to do, and this is another mental thing, and you have to get through this, is a lot of traders buy when it feels good to buy. You have to buy you have to trust the system. You have to trust the pullback. You have to say, all right, I'm on the lower part of the trend line. I have a drop here, but I have a pop here, and I have a higher low and a lower low. I need to buy into that weakness. All right. When I buy into that weakness, that's the only way you're going to get the best price ever, is buying the weakness, buying the fear. The only way you're going to sell the best price is selling the greed and selling the euphoria. And that's very hard for a human to do, for me at least. You want to go, but this is a business again. We have to come back to saying The only way you're going to be successful is to define this as a business and take these trades off. Don't gamble. Don't let it come back on you. So how do we know when we get out of here? All right. That's probably the easy part is actually waiting for this. This is the easy part. Now, I'll go through the day and say, this is 2 a.m, but just pretend that's good for actually. I like the overnight trade now. And even though I live in New York, I find myself getting up sometimes or staying up real late because I find that, the algorithms and stuff don't really affect, we don't have the news, but we do get the setups. I mean, these are still setting up. And this is excellent for prop traders too. We teach a lot of prop trading. And I have everyone start off with the prop accounts with this because you can qualify easy if and it's a good testing ground. You test it with the prop. You should take only the setups and you'll find out you'll start qualifying on these things. You abide by the rules. The same thing on the downside here. Look at this. Double top, the lower stochastic. Normally, when we say double top, normally if you get a high, you get a higher high or a similar highs. When you get a high like this, and a lower high on a stochastic. Remember what this is? This is the rocket going up. This is the engine shutting down. Engine shuts down, then the rocket starts to roll over. So first of all, divergence is number one indicator out there. Very similar to the MACD, very similar to some other ones. They all give good divergence indicators. I know more about stochastics than anything. So that's the system I teach. Now with adding the quad rotation to it, so whenever we have a downward channel, we look for our quad rotation. Now, 9-3, 14-3, 44. There's so much here, Etienne. I want to come back and do a webinar for you because there's a trade here. It's called an embedded stochastic level here. This embedded stochastic, whenever this is up here above 90, all right, and you get a rotation on the 9-3, and it holds the 20-50 period moving average, that is a bull flag. I'm the only person probably identifies a bull flag using stochastics, and it is right. And I'm going to show you that here in a second. So we just looked at, I'll take a breath. I don't know if you have any questions or anything.
I mean, this is really cool. There's a lot of stuff into this. I know in the past when we did videos together, a lot of people comment about the fact that, your charts look like a Christmas tree. It's like too many indicators, too many things. I think over time you kind of got to a point where you understand these things and you really know how they work and then you can read them easily. For beginners, is that too much stuff in the chart? Or do you feel like they could deal with it and kind of learn that way anyway?
What I do, I know a lot of traders are new traders. They come back or they find me through you or just being out there. I've been a trader for a long time. And success, is pretty good when things work and it becomes very logical. It becomes very, very logical. There's a lot of indicators on here. I guess I love this. I love the different colors. This is the way I've always had my charts. I have the template for, this. If anybody wants the template, just get in touch with me. I have the template for this for NinjaTrader too, because I use the NinjaTrader platform. So, this is my standard go-to indicators. I'll go over real fast. I have the 20 period moving average EMA, the 50 EMA, the 200 EMA, the main pivots, which I don't really pay that much attention to, but I do have them on there. These orange lines are my own support and resistance lines that go out for days. So if I find an important level, I'll draw an orange line and I'll extend it. So it means if we ever come down to it, I'll know it's there for something. And then our stochastics. And then there's the VWAP, which is very important. The VWAP is one of the best indicators you could have. And then I have our stochastics. Now, stochastics are formed with two lines, a percentage D line and a percentage K line. And not to go into again, feel free to, I'd love to teach you more of this, but we won't spend too much time on what the K and D line is, but I'm using the D line here. And the D line is the signal line. And the signal line is all, again, this has been worked on for years on getting the right rotations and how everything kind of orbits together. And when they all line up together like this, you get an explosive move. And that's just a quad rotation. Now, you add a divergence to this. Like I said, that's what I was just doing, my anatomy of a trade. This is let me go back. So this is what I call the holy grail. Remember we were talking about a quad rotation, and a divergence. That's what I call a quad divergence. The best setup out there. You know, 90. When you talk about that 95%er, if I was teaching my grandkids or my kids, or I don't have grandkids or anything, if I could teach my kids when they get old enough to trade, I would just say, you know, I'd teach them this setup and have them trade this setup. And then there's a couple other setups you do, but more time you're in the market, more time. If this worked, like we just discussed earlier, if I gave you a setup that worked 95% of the time, it worked so good, why wouldn't you wait for it? It's so hard to not, you know, and if that is true, and this is how we get to that, I don't care how many lines you put on that. This is pretty organized. I mean, I think this is pretty organized. The color scheme is good. I think it's a very pretty chart. This is it. So this is our buy signal. This is the super signal. All right, buy signal. You enter stock when, and this is the first. I just made these for you, so it might be a spelling error or two in there, but price has a pullback in the organized fashion. All right, so we're usually in an uptrend. I like a pullback in organized fashion means there's an identifiable channel. Everything channels out. Forex channels out, stocks channel out. You know, you can start to identify a channel. It's just basically the range that you're coming down in. And when you start to see that, you try to identify. It's what I call a 1, 2, 3 pattern, because you need 3 pivots, 1, 2, 3. And then you could, if you have 2 on one side, you could draw a straight line and go down, and you have 1 on top, you could put that and you'll have a parallel channel just by 3 points. And then you trade 4, 5, and 6. Now, if 4, 5, and 6 ended up being the divergence, and it's quad rotation, that's considered a super signal. And again, here, first stage is all 4 stochastic bands drop under the 20 line, which is all 4 of these drop under the 20. Then what happens is the second stage, the price bounces just a little. It goes up. Up here, it could be a little bit higher, it could be a little bit higher, but it has to just bounce a little. And the stochastics on the 9-3 bounce a little. And then stage 3, as the price then drops back equal or lower than the first stage price, the 9-3 stochastics turns up above the 20 line. So here you had that little bounce, and then you had the rotation back down, and the stochastics turned up above the 20 line. So that is your divergence, combined with a quad rotation, meaning that are bigger time frames in your favor. So this is not only going to give you a good trade, it's going to give you a big long trade. So when we have that set up, I know to take a bigger amount of shares. If I'm taking 5 MES, 10 MES, I'll maybe switch over to the ES and take a couple ES trades, because that's where you're going to make your money. And you know these markets. You get 2 candles, you get 10 points these days in some of but this is you have to wait for that. You always take it with a visual confirmation, the turn back up of the 9-3 stochastic activating the divergence signal. So right when you see that turn back up is when you take that trade. You take that trade right when you see that turn back up. And then you place your stop 1 to 2 ticks under the pattern low candle. So when you have that low and you get the turn back up, you put a stop right on that low. That's the best stop you ever get on any setup. What's great about it is the divergence fails, you should have a stop there. It won't work. And it rarely fails. So you're good in either way. So that's the whole, that is like a key setup right there. Just a key setup. And then, all right, well, are we going to wait for that? Remember I was saying before, I have the quad rotation identifying flags now. And this is just a textbook thing. So buy signal on a flag. A flag is a continuation pattern. Something I would trade. If the market's trending nice and you get a nice push, I got start buy signal, enter when, enter stock, I would say futures. Price has an aggressively moves up off the 20 EMA with a steeper than average move. So this is what we call a flagpole. And it just pulls off of a 20 period moving average. And then you're looking at the stochastics here. All of them are kind of up here. They're all, and what happens is the 60-10 is one of the most important ones. And I could do a whole webinar on the 60-10, but the 60-10 has to be above 80. And what happens is that 60-10 is the 5-minute time frame. So if that's embedded, all right, that's in what we call embedded. That means the trend is strong, and this pulls back to the 20 line. All right. So what happened? And it stays up above 80 as the 9-3 pulls back to the 20 and the price holds the 20. That is called a 2020 bull flag. 2020 bull flag. Again, Very simple. It works all the time. It's just a matter of putting the pieces together and taking it. Wait for the push up here, the pull back to the 20. Stochastics rotate down to the 20. The 60-10 holds above 80. The 20-20 comes to the price above the 20, and the 9-3 hit in 20. You buy when the 9-3 hits the 20. The 9-3 is the stochastic. When it hits the 20, you're buying. Usually that's the weakest part before it starts turning back up. Now, this doesn't seem like a big trade here. You might say, oh, I'm looking for a lot more and stuff. Well, this works on different time frames, different everything. This is the concept. This is the trade, and this will probably give you 3 or 4 or 5 points. 9-3 has dropped back down towards the 20 line. The 60-10 stochastic holds above 85, preferably 90. The higher this 60 period is, the bigger is the stronger the trend. All right, so that's the bull flag. So that's 2 setups right there. 2 setups. Now, say we get a system that gives you really good results, like maybe 80%, 75, 80% of those trades are really good trades. But there's still 25, 30%, losers. But we would still think that's pretty good. And if we look at this next chart here, I figured out when a setup gets weak, and we're able to see that. And we could eliminate 50% of the losers by applying a rule. And again, this works off the stochastics too. And I've done all the testing on this. So if you had seven, I would say 7 out of 10 trades were successful, 3 were losses. You could eliminate 2 of those, I bet, by applying this rule. All right. And this rule is, and again, this is based off of a super signal entry. And when do you get out of a trade? Now, should be standard. This is where you're going to be successful or you're not going to be successful, because success is, having a business plan means you have to have an entry and you have to have an exit plan. And if you're at one point you could get in, at this point you're like, well, I'm going to gamble and see how far it goes. Oh, it's coming back down. That's not being proactive in your account building. You want to do that. Perfect practice. I tell you, I don't know if I ever told you this. I remember my baseball coach would yell at everyone. He says, we're not practicing good. It's not practice makes perfect. He goes, it's perfect practice makes perfect. And I said, wow, that always stuck with me. I said, perfect practice makes perfect. That makes a lot of sense. You could do something wrong and continue or not be the best at it, and it wouldn't help you. Or you could do it each and every time. So this is you get into a setup, you have the stochastics. The important thing is this is kind of a downtrending market. One of the worst things to do is to kind of counter trend trade. It's very hard to do that. This will protect you. So you have a downtrending market and you want to buy that. So simple concept, you buy a lower trend line, you have a signal, you have a quad rotation. All right, you get the quad rotation, you have a lower trend line. That should be taken, actually. That's a good trade right there. But how do you know that this trend is not going to continue? So you have to figure out when you're going to get out. If the 60-10 stays under 20, 25, 30 and is stuck down here instead of up above the 90 or 85, 80, that means your bigger trend is down and that you need to sell every rotation of the 9-3 above 80. So very simple that you get, if you're in a downtrend, the trend is underneath the 200 period moving average. Your stochastic 60-10 is underneath 20, around that 20, banging around the bottom. You can see there's no move, and you get a fast rotation up here. This is basically the opposite of a bull flag. It's a bear flag. So identifying a bear flag is very simple by watching the rotation of your 9-3 and watching the 20 and just selling every time it gets up there. So that should be a rule. If you had a rule here and you get out, you wouldn't have to worry about this pullback and being wrong. If you had a rule, you're in here and you got the rotation, right there's a rotation right back down. Here you're in, here you're out, rule. Sometimes it moves fast, sometimes it moves slow, but the stochastics will give you that signal. A fast rotation with an embedded stochastic on the bottom is a must take it off trade. That's where a lot of people, my traders, get stuck. You have to have a perfect entry, you have to be a perfect exit. If you're late on this and you're late on this, you're not making any money, and that's why trading is so hard. And you have to be a pro. You have to be at it. You have to buy into weakness. You got to sell into strength. There's so many different things. You got to be in the right mindset. It's tough. It's really tough, but there's a way. There's a path. And it's really about conquering that discipline and understanding your weaknesses.
I mean, there's a lot there for sure to unpack, and people can definitely take time, watch it a few times if they want to. Tell me, you mentioned you have about three of these setups per day. What else do you do with your time when you don't have setup? Do you stare at the chart and kind of wait for trades, or do you set alerts? Or how do you keep track of the market?
I sit in front. I'm on the mic all day, so we're talking. I'm doing news. I'm talking to markets. I'm answering questions from the people in our chat room. I see people. I trade stocks, options. It's a full thing going on here. It's a lot about education. I love teaching trading. I love people being successful. The onset of the new prop trading. A lot of prop traders now use the system to kind of qualify, and I want people to be able to be successful doing this. So earlier I said, and I just came up with this, and I think it's ingenious, and I want to mention it, and hopefully, it catches on. But I've been working on a service to try to get these super signals out. Remember, super signals like a combination, and I think these things are worth tons of money. Because earlier you said time is money, and do you want to sit around if there's only 3 setups a day, right? But what if those 3 setups gave you 20 to 30 points? I mean, you can still have to deal with that. And what's more important for you, your time or you waiting for the setups and taking them and making money? That's a good question. So I said, yeah, I don't want anybody missing these setups. I'm in front of the computer all day. I'm on the radio all day. Let me set up a thing where I send out the super signals over my phone. So I set up an app, Voxer Network. You ever hear of Voxer? So we have a channel for super signals. So I have so when I do see that trade and people are not, I said, this is an important trade. I send out the alert here. So here's an example of the alert. All right, it's 12:18 p.m. We just came off the lows, and I'm seeing a 14.3 divergence here at 54.55, 54.54 buy side divergence. Your stop has to go right under 54.50, the lows of the session. Very important to have your stops in at this point because the weakness is in. But there is a slight 14.3 divergence here. And we're just seeing where we're going to go from here. It is 12:18 p.m. So I'll send this out, and then I'll send a picture of it, I'll send a picture of the chart in the setup. That way, people are not missing it. If they're like in the other room, they could run to the computer. These setups don't move. Etienne, I want you have to send me your name. I want to put you on this, so you get the alerts. You're going to see these alerts, and they're the super signals. I mean, they're the things you don't want to miss. So I really concentrate on that during the day. I really believe in this. Calling the markets and just watching the craziness that's going on in the world is how else I keep busy.
Yeah, it sounds good. I mean, if you can spot this in advance or have alerts, it makes a big difference. And your alerts, of course, you send on the traders, it's kind of very cool. So a lot of stuff there.
It's cool. It's I don't think, many people do that. I think it's important to be in front of the computer, and not everybody can be in front of the computer for these setups. So I'm happy.
Or not everyone want to be in front of the computer too. It's a question of wanting to do it or not.
Yeah, exactly.
Guide me through what you have left, and I think we can wrap this up, but we covered a lot today, so it's pretty awesome.
Yeah, well, I'm just going over some of these, everything. This is kind of the ideal setup. And if you find a channel, just to help people out here, if you find a channel, look for a divergence in it. That's going to be your channel breakout. Well, every single time. If you have a recognizable channel, which we talk recognizable, we're talking about a defined channel, 1, 2, 3 pattern, and you have the end of the pattern, you have a low and a lower low and a higher low and a stochastic. 9 times out of 10, that channel will break out to the outside. I'm not predicting how far it's going to go, but I do predict that if you buy the low and you have a divergence on a candle, it will break out of the channel. So we know there's a big move here, and that happens so often, and that's what we just have to wait for. And in every situation, just kind of very important, place your stop right on the candle low. It's so easy to do that. I wanted to go into coil divergences. There's a lot of divergent stuff that I do, but that's about it. And the flags, we talked about that rotation. If the 60-10 is embedded and you have a fast rotation, that's called a bear flag. And it's much different than, this is a scientific, mathematical way of, looking at a bear flag. It's not about just looking at the flag and saying, oh, it looks like a bear flag. I know that it's a bear flag because I know the internals. I know what I'm seeing on the internals, and And it's very easy now to identify a real bear flag. Oh, that was the Voxer network. I put that on there just to let people. So I'm sending out those alerts. But you guys hopefully get some information on that. And I think that was about it, Etienne. That's all I was going to cover today.
Cool stuff. I mean, we cover a lot here. So people can definitely watch it a few times if they want to, take notes. We'll have the slides in the show notes. People can download them and go through this if they want to. Where can they find you or connect with you if they need more info about what you do, or they just want to learn from you and trade with you?
Oh, yeah, absolutely. Of course, I always like giving back to you. So all your subscribers, I got a link, www.DTR, that stands for Day Trading Radio, DTR.TV/free. And it's a free 2-week pass into the site. You get all the alerts. You get attached to everything. You get watch the bots. I have so much on the site, the chat rooms. You get access to everything. So feel free to come over there and just ask me for anything, the templates, the PowerPoint presentations, and check out the check out the community. We have hundreds of traders trading every day together.
Awesome. So John Kurisko have a giant passion for trading. He's really good at what he does. Always sharing a lot of value here for people. I really appreciate that, and hopefully, John, we can catch up and see how you're doing in the future.
Etienne, I love the feedback I get from you. So thank you very much, and have a great one.